Good evening everybody, welcome back to a Chart Nerd Technical Analysis video. Today we will be discussing Zinfin, the ticker is XDC against USDT. I'm on the monthly time frame. As always, zooming out's a shout guys. Let's have a look what we're looking at here on the macro and give you guys a little bit of a breakdown of what's going on. So right now we do have this key demand zone, which was this wick low here in December of 22, that right now from this descending resistance that we've created for ourselves, that we've been hitting our heads on for a very long time, at the moment it does look like we are trying to come back either for some sort of higher low on this previous close in December of 22, or to come back for some sort of double bottom. Now it would be lovely to see a base build up around this area for XDC, which sits at, by the way, 0.019. So a very key level of support right here on this demand zone that I think coming back for some sort of potential double bottom underneath this resistance, potentially form another double bottom here in itself, right? Because you don't just want to come down, see a wick and then go for the breakout, because if you break out too impulsively, we'll just come crashing down again, guys. We need to build some sort of foundational base, i.e. very similar to what we did here. So we had quite a few months under this key level of resistance where we came in for this wick, and we did build some sort of double bottom base here before breaking out and eventually running into this descending resistance. So it would fast forward, if we do potentially come down to this 1.9 zone and retest it, i.e. build up a couple of double bottoms or a double base here, and then look to go for the break again of this descending resistance as it comes down on our heads. Now bearing in mind this is the monthly time frame, so I would expect if we was to come back to this support zone and this demand zone, then it would be over the next month or two, and I think it could offer optimal opportunity here, guys, to get involved. As what this entails is, from this support, what happened is we had this level of resistance previously from its inception back in April of 2018. So from this level of resistance, what happened was we formed this sort of round bottom here and had some sort of ABC, flat ABC correction to a higher level of support, or potentially some sort of cup and handle, really and truly. We had this really large cup, and then we had a handle and ABC correction back to support, and then broke out. And this technical target was met, by the way. So if we do go from this level of resistance where we started forming this sort of cup and handle pattern, going back down to the closes of our lows in July of 2019, you'll notice that when we did break this level of resistance, we actually ran up very shy of meeting this technical target, which was at 23 cents. XDC actually ran up to 19. And from this 19 cents, this is where we've created this descending level of resistance. We've come back down to this demand zone and this previous resistance, and we've now found it as support. So this is why it's my demand zone. It was previous resistance in 2018. We broke out in February of 21, and we've retested it for support in December of 22. Fast forward from this level, we ran into our descending resistance line, hit our heads on it many times. The more you hit your head on resistance, guys, the harder it is to break through, and the more confidence is given to say that we're failing to break out and we're coming in for a deeper correction. Right now, it's very tricky to say on the macro whether we can hold this low that we've put in this month, or whether we are looking to retest potentially by September this key range of demand zone back at 0.019. So I think this is where we are trying to get to right now. And believe it or not, again, as I've said, what this would entail is some sort of double bottom for XDC, where we've had this low, we come up to resistance, come back to this low again for a second point of contact, and then go for the breakout. I think that's a huge potential right now leading into the later part of this year into early 2025. So it's all about breaking this descending resistance and holding this demand zone in order to see continuation to the upside. And this was just from this massive impulsive wave, this was just some sort of flat ABC correction to a key level of support before breaking out. Now, failing to hold this zone, we need to look at all potential scenarios here. Now, this scenario would entail a further from our current low around a 60% correction from current price, and it doesn't sound too healthy. It really doesn't. But again, we have to look at all plays here. I'm not saying this is something that I'm expecting to happen, but if we was to lose our demand zone, bearing in mind that you can have deviation points, right? So if we do have some sort of deviation, we would need to see multiple points of closes underneath this support and confirming it as resistance to validate this. But if we do lose this key level of support at 1.9, then 985, 0.00985 would be the final demand zone for me, as what this entails would be since we had this key level of previous resistance on our cup and handle that we had, and we've broken out of this cup and handle, and since we've broken out, we haven't actually come back down and back tested these sort of key candle closes for support. So we've had the cup and handle pattern, right? The cup with the ABC for the handle broken out, and right now we've got the descending resistance. Could we be in a really large sort of ABC back down to this level of support and then looking for the breakout? And what we've got on the macro is this large low. We've got this high. We come back to this 985 range for a higher low on the macro, and then go looking to take out the current all-time high for XDC. It is a potential, but it's not something that has to come into play. As I said, I'm just looking at a large macro A. This was a B, and right now this could be a large macro ABC correction to this final demand zone. But as I've said, I don't think that's going to be the case. It's just something I wanted to look at. We have to cover all scenarios on the charts here. But right now, I think... Oh, I got rid of my key level of support that we needed to have on, so let's get that back on. Right now, I do think that we are looking to come back to the 1.9, and I think it was 0.017. So what I'm going to do is actually I'm going to get those off. And we're going to get a fib on from the current all-time high, retracing back down to this previous handle of the cup and handle, because this is where we had the A, the B, the C before the final breakout that led up to our all-time highs. So from our all-time high, retracing back to this low, what you'll notice right now is the 050 is at 0.028, which we're currently losing this month. The next point of support could potentially be this 0618 at 0.0177. And this would fill this previous wick in here. And we didn't actually touch this 0618 back in December of 22. So where I'm talking about a little bit of a deviation on creating this double bottom that we potentially have on our hands here, because we've got this low right here, which just failed to touch the 0618. If we do see a slightly lower low coming into the next couple of months, but touch the 0618, this I think would still validate the fact that we've potentially got one bottom and come down for a second bottom here before then looking for the break on that key descending resistance. That is an incredibly wonky line. On this key level of descending resistance that we've got for ourselves. So again, just to take away from this video, guys, we are holding key levels of support right now. I do think we are looking to pull back to the 0.019/17 area, which is this golden ratio retracing from the current all-time high back down to this ABC handle of the cup and handle that we had before the breakout. And this is the key levels of support that we're looking at. So right now it's the 0.019 to 0.017 that we need to hold as support to validate any further downside. And to validate further upside on the macro, we have to see this descending level of resistance that we have above in our heads broken in order to confirm the continuation back up to our all-time highs. One last thing to point out, guys. A lot of projects right now on the monthly do look like they're coming in for a death cross, which is a really negative sign. If we do get a death cross here for XDC, this is something we'd have to monitor moving forward that could validate the further, my second theory, to that final demand zone where we do pull back down to these closes of the cup and handle that hasn't been back tested. So remember, as I said, when we broke this level of resistance in the past, we haven't actually come back down and back tested it for support. So if we do see a death cross on the monthly time frame, guys, where this yellow EMA crosses beneath the red and we get this cross and we run into that as resistance and lose this level of support that we're holding at 0.019 in /7, if we lose that and hit our heads, then I've given you your targets back at this key final key demand zone, which would potentially give us our A, B, C. Okay, but this is only going to be validated if we put in a monthly death cross, run into these EMAs and fail to break above them, and also sweep this low. Okay, so there's a lot to happen before that comes into play, which is why I'm saying ideally what we want to see is a double bottom retest on this current support from December of 22. As long as we can come back and hold this key level of support over the next coming months, if it comes into play, and we can break out of descending resistance, then we're looking really good for continuation here to the upside. So right now, my final key points to take away, I'm looking for a pullback and to fill this wick in of December, which could see us pull back a further 29 to 30% from here. But the only thing that's sort of giving that away from me is the multiple hits on our heads on resistance, the fact we've lost these EMAs, and right now we could come back to this support level before running into them, where it makes a decision either to break out and reverse this death cross that's potentially forming, or we create this death cross, run into the EMAs, and then confirm whether we're going to lose support and come back to these lower targets that we was looking at before. So I hope you enjoyed the content today, guys. If you did, please do give me a follow, a like, a comment, whatever it may be. I do appreciate your time. Thank you for watching. From Chart Nerd TA, take care. Peace out.